morning, investors and corporate. Welcome to SET Digital Roadshow third quarter 2023 performance review. The session will run about 45 minutes, including Q&A. Company will start the session by 30-minute presentation, followed by 15-minute Q&A. During Q&A, investors may leave your question in meeting room chat box, or you raise your hand function. We will open your microphone so you can ask the question to the company directly. May I now invite NR Instant Produce Public Company Limited to start the presentation.
Hi, good morning, everyone, wherever you are. Sawasdee krab. My name is Dan, CEO, and we have Kun Pen, who is the CFO, who's with us today. So let's go right into it. So just a brief summary of this past quarter. So we saw a nice healthy jump in revenue of around 30+% increase in gross profit margins, a slight increase in SG&A, and an increase compared to the second quarter of in terms of net profit. We'll go more into this in the financial section. The key highlight being the incorporation of our new retail strategy in Asian grocery, which is an extremely important component of our strategy moving forward. So, as everybody knows, these are our three primary categories. So we have specialty foods on the left-hand side, comprising of ethnic, sauces, and pet foods. Our direct-to-consumer group, which is our e-commerce business in America that sells supplements on Amazon, and our new omni-channel Asian grocery strategy, which focuses on the UK. And then on the right-hand side is Climate Action, which is our plant-based foods and biomass carbon capture. We've been working on biomass carbon capture now to go to net zero for 3 or 4 years, and it's been a struggle, to be honest. But I'm very pleased to announce that we finally have our first project underway. So just a review of our value chain for those of you who don't know us. So what we seek to be is a vertically integrated, sustainable food manufacturer. Right. So starting off with pesticide-free, sustainable farms, both mostly are contract farms. And then you have in the midstream component, which is food manufacturing, where we have a variety of different factories. Today we have 3 sauce factories in Thailand. We have a pet food manufacturing plant, and we have a plant-based joint venture manufacturing plant in Ayutthaya. And then we have our brands. We're still around 70% OEM and 30% brand. But over the next 3 years, we're seeking to change that, where we have a further increase in terms of brand as percent of revenue. The newest component of what we're trying to do is really a logical extent of our business model, which is to also vertically integrate into the downstream distribution of Asian food products, from sauces to ethnic foods, including plant-based foods, but in an omni-channel context. So you have e-commerce, you have brick and mortar, and you have food service. We get questions whether we should be getting into retail. I'll go more into this in a separate slide. But for us, it's all about solving the pain points that we've endured over the past decade. So I think for key updates over the past quarter, I won't go much into it, but we're still very much triple bottom line focused. We do a lot in terms of our impact into low-income communities in Thailand. We're still the only carbon neutral food company, as well as carbon neutral certified food facility that's listed on the Stock Exchange now for 4 years in a row. And recently, we've got numerous awards, including Best Managed Company. We've got the Corporate Governance A rating from the SET, as well as CEO of the Year. So what you're going to see, I think, over time is a gradual change in terms of the revenue composition of our company. And if I'm speaking too fast or not loud enough, do let me know. So ethnic food and specialty foods now represents only 63% of revenue. We have e-commerce, which is 12% of revenue, which is these products here you see in the middle, which is the testosterone, vitamin gummies, and supplements that are sold primarily on Amazon in the United States. 8% is plant-based foods, and as you can see here, our new category, which is a 17% of revenue composition, which is our omni-channel Asian grocery. I'm going to be spending a good chunk of the time talking about this strategy. So why don't we just quickly go through this? So again, historically, we've been a ethnic food manufacturer across almost 7 different categories, primarily ambient, almost 3,000 SKUs that we manufacture per year. Going forward, we're actually looking to simplify our SKU portfolio to increase margins and then focus on scaling key champion product lines as well as on our branded side. Overall, industry trends is looking very favorable, despite what you see macroeconomically around the world. You can see here on the upper left-hand side, the demand for flavor and spice is growing 7% CAGR per year. And if you look at the upper right-hand corner, I don't have a laser pointer, unfortunately. You can see that the Asian food market is also growing at around 7% CAGR. And it's going to grow from 160 billion this year globally to 300 billion in the next decade, which represents a significant market. The majority of that growth is going to be driven within North America, within Europe, obviously within Asia. And if you look at the bottom right-hand corner, the key drivers really is increasing demand for Asian food due to its lower cost in terms of calories, better flavor profiles, increasing immigration rates in various countries. One of the reasons we're very focused on the United Kingdom is immigration in the United Kingdom is at all-time high. In the past month alone, almost 700,000 people immigrated into the UK, of which almost 1/3 have Asian ethnicity. The key opportunities in Asian food is really around innovative items that are to be prepared for Asian food restaurants, and I think this is what's going to play to our strength as manufacturers. One of the big segments we hope to capture within Asian food restaurants is actually within Asian plant-based foods as well for delivery, as 1/4 of Asian plant-based consumers in Europe are Asian, and yet there's almost no Asian plant-based offerings. We've been over the past year been building a new sauce plant dedicated to basically sauce. It's very different from our other factories, so it's almost automated. The capacity is 2,100 tons per month. It's slated to begin operations in Q1 of next year. We expect to begin exports in Q2 of next year. We're very excited because we have sriracha that's jalapeno based. That's going to be used for export around the world. I don't know if you can see it, but I actually have it in front of me at the moment. Next slide. So getting into our next segment within specialty foods is pet food. And so we have a pet food factory that's done very well. The market, as you know, is around 50 billion baht in 2023. Dog food representing 60% of that market. What's very interesting is the premium end of the segment represents more than 50% of the market. We currently our current products are 75% brands, 25% OEM, and we kind of sit in the middle of mainstream at the moment. And the focus of this next year is to move into the premium segment. Next page. And I think we've done brilliantly in terms of achieving our milestones. So our factory only finished renovation and construction in this November, December of last year. We've now hit, as you can see here in the month of September on the chart below, 92% effective capacity utilization in our first phase of 1,800 tons per month. We've now invested 135 million baht to boost that production capacity to 4,000 tons per month. That's slated to come online in the next 3 to 4 months. We believe, according to our business plan, that we should be able to achieve an effective capital capacity utilization of the new production line by year end of next year, in which we hope to target a larger segment of the premium, as well as to increase export sales to a 50-50 percentage ratio. Given these both move to the premium as well as increase on export, we seek to achieve close to a double-digit net profit margin versus the single-digit net profit margin that we got in September. So to put that in perspective, that's 4,000 tons per month is 4 million kilos per month with an average sales price of around $1 per kilo. So now I want to quickly move into what slightly makes me very excited is this end-to-end sustainable Asian food platform, which is going from farmers, from manufacturing, and then directly into retail through an omni-channel context in the United Kingdom. Next page. Next page. Oh, wait. Next page. Sorry, the slides are mixed up. Okay, so this is the business model. So on the very left, we have our factories, right? And then we have the factories of our partner companies. And we're very open because what we're doing is we're trying to build a platform for Asian exporters who want to export into the United Kingdom. And that platform starts with manufacturing, sourcing of fresh fruit and produce. We then export and without going through middlemen. Okay, so we're trying to cut the middleman out of the picture. Selling directly into our cash and carry, our retail supermarkets, as well as our direct-to-consumer mobile application. So right now we've acquired one cash and carry, which is called Chumli, as you can see there in the middle. And then we've acquired one supermarket in the middle of Chinatown in London. And our key for the next 12 months is to either acquire or open an additional 4 to 8 stores in 2024. So the business model is we have cash and carry, we have supermarket, and then we have direct to consumer or delivery to the end consumer. We don't actually have warehouses for the application for the mobile delivery. So so basically what happens is a picking system. So in other words, a customer puts an order and it's basically picked in our supermarkets and then it's delivered to our consumers. We're very excited about what we're doing. And one of the key reasons that I get a lot of questions as to why we're doing this. And the sole reason is this is an extremely hyper-fragmented industry. If you go back to the scale, right? So $160 billion a year globally. If I were to narrow that down into Asian groceries, supermarkets, right? That's around $60 to $70 billion a year. Okay. In the United Kingdom alone, that market is worth around $3 billion in terms of Asian grocery across almost 1,500 supermarkets across the United Kingdom. And in addition, the Asian restaurant food service industry is worth around 7.8 billion pounds. So it's worth around somewhere between 8 to 9 billion US dollars. So it's a tremendous industry and it's characterized by hyper-fragmentation. So you don't really have any big incumbents. You've got a bunch of single owner first generation people. If you imagine going to Chinatown, whether you've been to the UK or not, you walk into any Chinatown store, if you walked in there 30 years ago and you walked in there today, most likely it looks the same, it's operated by the same people, it's owned by the same people, and it's still probably using the same system that they've been using over the past 30 years. And this is our opportunity. Imagine a world before 7-Eleven, a world before Walmart. We're going to go in there with standardization, number one. Number two, scale, but most importantly, sourcing. So the first two supermarkets we acquired, immediately off the bat, we're able to source cheaper than them by 20%. So we seek to improve margins at retail immediately by cutting out the middleman and going from manufacturing and wholesale markets directly to retail. Next page. Next page. I just want to go briefly through the financial performance. So this is the cash and carry that we acquired called Chongli. As you can see here, on the fiscal year ending March 2023, they did around 674 million baht, and they did a profit of around 50 million baht. In the fiscal year ending 2024, they're expecting around 30% organic growth. So that's basically growth before us doing anything to change their company, and without acquiring more, building more Chongli sites. And if we were to include that in our revenue, it would increase our revenue by 20% as well as our net profit by 16%. Next page. Go back to the previous page. I want to add that we bought the company for around 200 million baht in our SEC filing, and so if you look at these figures, I think we should be able to acquire somewhere within this ballpark of plus or minus 30 to 40%. And so we're able to acquire these stores at a fairly good, very low EV/EBITDA model of around 3 times, and probably just under 2 times book. And that's very attractive for a big reason, because most of that book is actually inventory, liquid inventory. So essentially, we're kind of acquiring it probably at 1.5 to 2 times EV/EBITDA. And I think as we grow, we already have around 6 to 7 other companies that are in the negotiation, including one that's in a late stage negotiation to acquire. I want to go to the next supermarket that we acquired. The performance is not as good. It's called Siwu. For the 9-month ending 2023, they did 300 million in revenue. So please be aware, this is a different calendar year that we're using this metric now. So for the 9-month ending period of 2023, they did around 300 million baht in revenue with a slight loss. Now, the attractiveness of why we bought this versus Chongli, which was extremely profitable, is this owns prime real estate in the middle of Chinatown that's irreplaceable. We bought it based, we only paid £1 million, which was around 40 million baht for controlling stake in this company. But it basically is a showcase flagship store for us. And so part of our strategy really is to acquire where there's really good real estate, and we're buying based on the value of the real estate. And then our plan really is to then do better jobs of merchandising and improving margins. But most importantly, is basically taking things that we manufacture, as well as what our partners manufacture, as well as what our farmers grow, and then selling it onto retail. We're targeting 10% of revenue from all these stores over the next year to organically increase from products that we manufacture or source directly from Thailand. So why am I very excited about this? And I want to talk a little bit more about how we plan to grow. So we're going to basically grow using very little capital. I think as we go into a world of risk, we've been thinking a lot about, well, do we use cash? What's the best way to grow our business? And so in the beginning of the year, as we are contemplating this strategy, we felt the best way to do it was to do an IPO of our direct-to-consumer business. So what we've done is we've signed a business combination agreement on the 30th of September with Curious Acquisition Corporation. And we're going to take our entire business, which is the wholesale supermarket business, our e-commerce business, and our plant-based business, and we're going to do a reverse merger, or what they call a SPAC, for direct listing onto NASDAQ. Currently today, as you can see in the bottom left-hand corner, we've signed the business combination agreement and we've filed with NASDAQ. We hope to complete our financial audit using a US FBLC approved auditor within the first 3 months of next year. And then we'll go into the SEC approval process in the same period. And then we hope to do a first day trade of our IPO in the beginning half of next year. And this is an important strategy going back to how we plan to grow. So what we plan to do is, rather than offer cash to acquire these supermarkets, we want to do a cash plus shares. And so I'm quite excited. There's a lot of these supermarkets who are very interested to swap, 50% of their company for shares, and then they're going to get locked up for a period of time, and then the rest we use cash. We're expecting to raise. There's already $22 million in this SPAC, $22 million, and so as we grow our branch footprint, in which we hope to target in the next 36 months somewhere between 20 to 30 branches. That's going to be paid by issuing shares in the Bamboo Mart. That's the name of our company, as well as using cash from the IPO to basically drive growth. So it's both non-dilutive to NRF the parent, as well as not cash resource intensive to the parent company. And over time, we believe that over the next year, we'll also be able to sell down some shares to return to the parent company as well. And so you can check it out. The ticker symbol is KACO. It's listed on NASDAQ with a market capitalization of $50 million. That $50 million is prior to the business combination of Bamboo Mart, which represents our direct-to-consumer market business portfolio. So super excited with so we're super excited with the business model. We've been engaged with our underwriters. They're also very excited as well. It's a fabulous opportunity to consolidate an extremely large market opportunity, which is the Asian grocery supermarket, which is a market that we manufacture and export into 30 markets around the world. I personally walked 600 supermarkets, and I can tell you right now, as a fact, with pictures, and meeting with all these store owners, that it is an opportunity to provide a consistent standard of quality service, better merchandising, and better margins. So super excited. Also, what we're doing is we've just tied up with Shein, which just announced they're doing their IPO. And we're also going to launch a Bamboo Mart store on Shein USA. Shein actually wants to expand their offering beyond just clothing into basically consumers. And so that's a good partnership that we plan to do. And they're actually going to be promoting this non-fashion area and giving us really good terms to do it. Okay, and I want to touch up a little bit about what we are doing in terms of moving to net zero. So we really haven't talked about carbon decarbonization and negative carbon for a while. And the reason is we've been trying to work out the kinks, and it's primarily logistical hurdles. And so this is how we plan to do it. So our first pilot program will start in the northern part of Thailand called Chiang Rai. As you can see here in Chiang Rai. And we're basically going to work with a village of around 200 households. And currently they grow a variety of different crops, from corn to chili peppers, etc. So basically what these farmers do is they grow and they burn their fields. And this, we estimate around, Thai farmers burn around 18 to 20 million metric tons of biomass per year, or what's left over on the fields. And that's what causes PM 2.5, and hospitalized 2 million people in the north last year. So we're going to incentivize the farmers in this village to basically grow product for us, and we're going to pay them to basically collect all the residue, and we're going to take that residue and we're going to convert it, and we're going to burn it in a almost zero emissions process. And then we convert that residue into what's called biochar. We take that biochar, which is basically solidified carbon, and we bear it into our field, and it generates carbon credits. We're expecting that this village is going to generate 4,200 carbon removal credits, which basically offsets two of the scope 3 emissions, the scope 1 and 2 emissions of our factory in Thailand. So that will allow our factory in Thailand to go to net zero, hopefully next year. And we're going to do it while also eking out a small revenue of 100,000 baht. So I think if we're successful, I think will we become a role model for food companies on how to get to net zero without it being a drag on product. And I believe that if we are the first to come out with a truly net zero product, supermarkets, especially Western supermarkets in Europe and America, which represents 60% of our sales, will prioritize, if not incentivize us to sell product. So excited. I think you're just going to have to follow up to see whether we're successful in doing it. But I'm very happy with our progress. So with that, maybe I'll let Kun Penrai, our CFO, maybe quickly talk about the financial performance.
Thank you, Dan. Okay, for the third quarter, we have the new business coming up is the Asian grocery. So therefore, the sales is including the supermarket also in UK. And therefore, you can see that the third quarter 783 is higher than the last quarter, and then for 30%, and higher than the last year 35%. Did you hear me? I will try to talk louder. Okay. It's for the year on year, for the 9 months, the sales, the revenue is higher than the last year for 9%. Okay. And then for the breakdown revenue, you can see the ethnic as in dimension. We have the breakdown revenue for 63% for the ethnic food, 8% for the plant-based, 20% for the nutrition, both mean the omnichannel for Asian grocery, and then 2% for the e-commerce. For the 9 months, the same thing. You can see that for this year, 65% for the ethnic, 10% for plant-based, and 40% for the e-commerce. I'm sorry, for this year we have added the supermarket for 7% for the supermarket, the e-commerce for the 16%, and ethnic food is a 68%. You can see the gross profit at the 235 for this quarter is a higher in terms of the amount is higher than last year because of the sales increase. But however, for the gross margin, it's dropped from 37% for the last quarter to 35% because this is the average gross margin. Pet food and Asian grocery is a lower margin, lower than the ethnic food and then e-commerce. Therefore, and then this quarter, pet food is a high sale, is sale increase. The same thing with the Asian grocery is have the increase on this one.
So in summary, as our revenue composition changes, our gross profit margins will also change as well. And the reason is the different segments of our revenue composition have different gross profit margins. So whereas food and e-commerce have higher gross profit margins, pet food have lower gross profit margins, for example, like 25%.
Thank you, Dan. For the SG&A for this year, because recently excluding for Asian supermarket also less money in terms of the amount is 246 higher than the last quarter and in the last year the same quarter. But however, in terms of the to revenue is a drop, from the 31% to 30% for this quarter, and compared to last year at the 37% drop to 30% of the total revenue for this quarter. In terms of the 9 years, 359 is a 37%, compared with the last year is a 320.
I think what we're trying to do at the moment is trying to reduce our SG&A expense as much as possible. Although in this past quarter, we had slightly higher SG&A than we had targeted, primarily due to legal expense around doing the IPO. However, what I think we're going to see as we go into the IPO, and I think this is the key benefit of the IPO, right, is a tremendous increase in terms of our book value as we realize a one-time gain in terms of assets, and as well as a one-time gain in terms of net profit on some of the shares that we own in the listed company. Yeah.
And then the EBITDA is for this quarter. The 26 is higher than the last quarter because last quarter, the second quarter of this year, we had 38% for the impairment loss from the investment. And then for the comparison last year, the same quarter, the last year, the third quarter, we have to book the gain on the sale of investment 130 million in the last year and the third quarter. That therefore, to see the number is compared for the operation. For the 9 years, EBITDA.
It's okay. Let me take over. I think she's having troubles with her throat. So in terms of net profitability, I think this is a very misleading figure, and that's because we took a one-time restructuring write-off in Q2, and now what we hopefully, if our auditors agree, is we should see a write-back in terms of a net gain, in terms of a fair market valuation of what we own in our investment portfolio. In terms of our financial ratios, the inventory holding period has slightly changed, and that's primarily due to the nature of retail. So as we buy supermarkets, they hold larger amounts of inventory, but not that much. But they own it for, and that's because we're importing products into the supermarkets, and these supermarkets actually have large distribution centers. And so half of that, 60% of the revenue is retail. The other 49% is wholesale. And so there's inventory there. In terms of payment and collection, I think it's quite stable. In terms of our debt ratios, I think what you're going to see is as we go into the IPO, we have raised debt in order to fund acquisitions in e-commerce and supermarkets. Now we're basically creating liquidity around what the assets that we had bought via an IPO. And so what you're going to see is, number one is an increase in book, which will tremendously drop the DE ratio, as well as the net debt equity ratio. And as I mentioned, a one-time gain. We've actually done a fair valuation of the IPO. Can't really say what it is, but it's basically a multiple of revenue. So Bamboo Mart on a trailing 12-month basis with no further acquisitions is around $60 million revenue on a trailing 12 months basis. And then as we go to the IPO, that would be a valuation of a multiple of revenue, which you can look at comps. So we'll go into a Q&A. I just want to touch up on this last page. So, we're very focused on long-term competitive advantage and shareholder value. And I know that the market is very short-termism, but we believe that in order to truly succeed, we need to solve our pain points. And that means deep customer insights, And we believe that that also means vertical integration to improve our margins, and this capitalizing on this amazing opportunity in the United Kingdom. I believe the vertical integration and the shift to brand and retail will increase our margins over time. And we believe that in quarter four, in this ending quarter of the year, we should see a historical high in terms of revenue. And that's because we will be consolidating the retail part of these supermarkets for the full quarter in the quarter four of 2023. In quarter three, it was only 1 month's worth of consolidation. So as you can see here, as we go into quarter four, we're gonna, as we consolidate 100% of the revenue for the full quarter, we're gonna see a nice large jump in terms of revenues. I'll maybe end with this. So, you know, we did have a lot of questions from other investors regarding why we got into retail since we're manufacturers. And I would say is this: over the past decade, one of the biggest challenges as an exporter has been getting to know who our customer is. I'm very confident I can say this almost with, I wouldn't say it's factual, but I would say with a 99% degree of confidence, that no Asian exporter that exports into the Asian grocery supermarket actually knows who their customer is. And the reason is the importers, the Asian supermarkets, they're not sophisticated. So there's no kind of collection of data. There's no loyalty programs. They don't allow you to work on to have focus groups. And so you're kind of flying in the dark, right? And so historically, our entire industry has been dominated by brands that have just been there for 3 or 4 decades. And what we hope to achieve with retail is basically to flip that equation. As we own channel and we extract data, we're going to better understand who the customer is and then be able to reach out to the customer and have them try out our products, improve our products, and then better earmark our marketing campaigns to these customers. I would also say that only because of COVID did this opportunity come up, is because now a lot of these Asian grocery supermarket owners, they're seeing that the world is not stable, and they're more willing to sell their stores. And there's also kind of like this generational shift, right? Most of these are first generation Asians, or 60 plus years old, bordering 70, and ready to retire. So we built this team that's a retail UK focused team that's doing this, and we're quite excited. And we're working with other exporters who want to enter this market as well. And so I think we're going to drive tremendous growth and bottom line organically, as well as through store openings over the next year. And so if there's no further Q&A, thank you very much for joining our session. I think we have exciting 2024. Oh, lastly, I'll end with this. There's also a lot of questions on the UK economy. I would say this about the UK economy, as well as the Asian grocery supermarket, Asian food market, export in general. So the target market for Asians tend to be slightly higher in terms of education, lower debt per GDP. They tend to also be very sticky because Asians eat Asian food. If you ask any Chinese or Asian tour group that travels, most of the time, at least 80% of the restaurants they want to eat, especially in the UK, they're going to want to eat Chinese food or Asian food. And so you have a very sticky market, and it's only growing due to immigration, as mentioned earlier, as well as increasing interest in eating Asian food. So I believe that we've got a good market. We have a very focused strategy moving forward. And I hope if you follow us that you're going to see those results come in the next calendar year. And with that, thank you very much, everybody. I don't think there's any questions, right? Yeah. Okay, thank you, Pat. Sawasdee krab. Oh,
The
sorry.
session has come to the end. Thank you very much, investors and corporates, for joining the conference. If you do need further detail, please feel free to drop us an email. Thank you very much ครับ
ขอบคุณค่ะ
Thank you, Pat. Sawasdee krab.